Hello, welcome to the week ahead with me, Chris Pollock. Hope you all had a relatively calm week this week, just gone. Thanksgiving, obviously, in the US, Black Friday, half day over there as well, without too much volume in it. As a result, maybe markets not moving quite as much as you'd expect towards the end of a normal trading week. So hopefully you've heeded some guidance to not try and trade it the same as you trade every other week, and if anything, maybe not trade it at all. So there's not too much we can look back on to learn from the week just gone. But let's look to spend a bit more time this week looking at the week ahead. Um, One thing I'd say, we did have some volatility in gold this week. There has been some big commodity moves. Gold's been down significantly since those highs, 27.45 all the way to 26.30, and that was just Monday. But things did settle down later on in the week. If you want to understand how to use these volume profiles, you know where to find me. So let's look towards the week that is due to come and strap yourself in. This is going to be a firework event, I would suggest. We've got tons of big data to be released, and things for these next couple of weeks from Monday should be pretty lively before we goes back into a sort of snooze fest. But starting the day on Monday, lots of bits and pieces out, nothing huge. I mean, if you are interested in trading in Asia, this Kaizen manufacturing PMI is a pretty important one, not deemed as a high impact news event over here. But the real big one is the PMIs. We'll remind those of you who weren't familiar and haven't heard these before what a PMI is. A purchasing managers index. Purchasing managers are in charge of buying in the right amount of products and components in order to make their inventory for their business. So if you're a purchasing manager for Apple, you're buying in new screens and new components in order to build new iPhones, new iPads, new MacBooks. Therefore, to get your inventory balance correct, you need to know exactly how well your sales team has got on, right? How much product has been sold out of the door. And therefore, you can replenish the stock accordingly. If you've made 10 million iPhones one month and you sell 1 million, you probably don't want to make 25 million the next, right? So these purchasing managers in the US, this is a survey of 300 purchasing managers. Once you get a view of the 300 biggest manufacturing companies in the US and how their businesses are doing, you have a pretty damn good clue on how the whole US economy, certainly on the manufacturing side at least, is getting on. So these are deemed as leading indicators for PMI. And if you kind of have a look at the beautiful what moves markets spreadsheet from the Bundesbank, or PDF from the Bundesbank here. We've got the something which we'll come to in a moment. But the ISMs are historically the third largest volatility event on the calendar. So these are not to be sniffed. So we should get off to a nice start. These 3 o'clock news releases for me preclude me from kind of taking trades on the open. I'm not a huge open trader most of the time, but I'm certainly not an open trader when there's big news events at 3. I don't like to, it's hard enough making money in the markets when you have to get your timing right on the entry. You have to get the direction right, your stop right, and your target right. Add yourself a 30-second time limit, a 30-minute time limit on that before you're tossing coins into a piece of data. And it's not high probability trading, in my opinion, especially due to the fact that most of the market will be waiting indeed for this number and often moves a little bit on these final PMIs. Well, so that's the plan for Monday. The inflation side of it, the manufacturing prices, used to matter quite a lot. It's mattering less and less. Inflation is, for now at least, back in its box, more or less. So more interest is on the economy. Are we being drilled into recession by these higher for longer interest rates? PMIs well tell us we are predicting less than 50. Less than 50 is contraction, above 50 growth. And so we are expecting things to be turning looking relatively weak here, stronger than last month, but still below that 50 kind of marker. But crucially, nowhere near or not anticipated to be anywhere near as bad as what we saw in Europe last Friday. On to Tuesday, starts nice and early with the CPI in Switzerland. This is a nice news event. If you like kind of follow through, it tends to work quite well on the dollar Swissy and the Swiss yen. So take a look at those in the morning on Tuesday if you want to take a look at. Tends to be quite a nice market mover. And then we're on to JOLTS. What week does JOLTS week come out on? You've guessed it. It's on the US employment report. It's on non-farm week. And this week, as we get to on Friday, is that week. So JOLTS gives us a little heads up on Tuesday. This tends to create a little bit more volatility than we see in other markets. It's not a number that's been around a while or looked at for long enough to be in this data source over the last couple of decades. It's only a number that I've been really paying attention to for the last decade. But this gives us a clue of how job offers, the number of jobs on job boards, are performing in the US. Typically, if that's increasing, then that shows there's an appetite for employment. Maybe that's a good sign for the US economy. So let's see what those numbers bring. Again, a 3 o'clock print. You guessed what I'll be doing on the open on Tuesday. Very little. On to Wednesday. I'm not going to be up late or early, depending on which way you want to look at it, for the Australian GDP. My Antipodean colleagues may well be. I'll be looking at these ADP numbers, although this is a number of, as much as it's on the calendar as a high impact news event, I would make this maybe medium at best. So pop that down the ladder of importance compared to everything else we're talking about this week. We're on to now the service side of the US economy. We get those numbers out at 3 o'clock again on Wednesday. You guessed it, not trading the open. And we've got Powell on the wires. This is from the Deal Book Summit in New York. So whenever Powell's name is mentioned on one of these calendars, it's always a high impact news event. Often, though, he doesn't release text, or he says he's not going to talk about economic policy, specifically more theory. And I'd be interested to see if we hear something hard and fast out of this. It's not one of his big ones, so I'm not certain this is going to be a market driver necessarily on Wednesday. But you never know with Big J. He can move the markets with any misstep. So worth tuning in for a little bit. Construction PMIs in the UK on Thursday morning. OPEC meetings, right? We've seen a lot of chat this week about OPEC looking to cut oil supply. And to be honest, the reactions on oil when this has happened haven't been particularly responsive, right? We had one on, which day were we? Wednesday. We had some news out about this and the market drilled lower. I think we heard again on Thursday. There was some talk of another potential cut. It moved lower initially, although it bounced back. They haven't, if they're talking about oil production cuts for the new year, you'd expect maybe oil to garner a little bit of momentum to the upside, and it really hasn't quite managed that too much until, of course, today. We're recording this on Friday, so this is just, we're approaching the European close, seeing oil get a little bit of life, maybe the most interesting market on this Black Friday. But those OPEC meetings are going to be important, so I would tune in and see any detail we can get out of that on Thursday. Thursday is normally a lovely day to trade, but I would put the caveat in that the Thursday before non-farm Friday is probably the least interesting Thursday in the calendar. So you love Thursdays, but this one maybe isn't the biggest. We do have challenging job cuts at 12:30 and unemployment claims on at 1:30. So there's a bit of data before the open this time. So hey, maybe I can trade the open on Thursday. Let's see. But yeah, not a lot else really out on that Thursday. And given it's ahead of non-farm Friday, manage expectations, because it's all about the non-farm Friday, right? We've already got the expectations out. We're looking at over 200,000 jobs created. That's for last month compared to 12,000. This is partly down to hurricanes that were hitting the east coast of the US, but this is going to be quite a bounce back. 200,000. I can't remember the last time we had something in a few months, I think, since we had something quite that big. We drill in on this. Oh no, the month before, October, but the 2 months prior to that were both lower than that. October was the outlier there with a pretty hefty one, a 250 plus number. So maybe we're getting ourselves back to normal. This is obviously a recession indicator, and we have had the employment rate nudging up over the course of this year, triggering that SARM rule. Zoom in again, you'll see it a bit more clearly. We've had some big spikes, but that has been easing off. If these unemployment rates do tick up, maybe there's recession fears from this unemployment rate, and therefore that could well lead interest rate policy in the US. That's why we care about this number, and that is why it's top of the list of the most volatile events by quite some distance in the US data release calendar. So we're very interested on non-farm Friday. Don't tend to do any trading whatsoever before that. Probably not even worth getting to your desk, I wouldn't say, before midday on a day like this. All the fun normally happens beyond the non-farm figures. We do have a little bit of data afterwards from the University of Consumer Sentiment. By comparison, it is very low down priorities compared to this. But the opens can be interesting. We do have a lot of Fed members on the wires as well. Bowman, Goolsbee, Hammack, and Daly, all important ones, all on the wires on Friday as well. So you might want to be getting your Squawk and your news feeds up and running with everything that's going on with this ceasefire or lack of ceasefire in the Middle East as well. Your news feeds are of critical importance at the moment. So let's see if you can those bond markets. Not a huge week for the bond markets. Let me show you why. I always do set this up before we speak. For some reason, it likes to try again and show you what's happening next week on the bond markets. Got some JGBs out in Japan, probably the most important of those. Get this onto London time at least, so we know exactly where we're looking on this. And they are out at 3:35 in the morning, so that's going to pass me by. But there's probably going to be volatility potentially on the dollar yen on Tuesday, so maybe have a look at the currency traders. They will have a nice day. Looking at yen pairs on Tuesday. German Schatz auction, and the other big one, the German 10-year Bund. A much more reasonable time for me, 10:30 on Wednesday. That probably rounds off the week. We still haven't had a 10-year regular bond auction since Trump was confirmed as the new president. And when we get that one, I think that could be one of the nicest or most interesting bond market auctions that we see. So maybe that's, I think, perhaps the week after we'll get that one through. We'll bring that to you next week. But yeah, next week's going to be a little bit more fun. I'll talk about the seasonalities again, because we love talking about things that we can hang our hat on. Not the options data, but the seasonality of the S&P is pretty attractive as we run into the year end. One of the reasons for this is there's a lot of money that needs to find its way into the markets, right? Everyone, believe it or not, if you're employed in most countries and paying into pensions, that money is finding its way into the stock market. So even if you're only earning a moderate wage, you're still buying stocks every month, whether you know it or not. In November, where there's this holiday on Thursday and that half day today, plus in December when we get Christmas and into the new year, there's a little bit more of a condensed number of days where this buying can fit into the market. And that means that we typically see more of an aggressive higher, what's known as the Santa rally coming into year end. We're through this little window of weakness. We talked about this last week, expected on about the 20th of November and bounce back. Well, let's have a look at the yearly chart for the S&P 500 and see where this low was on the daily chart. Well, this low here was not the 20th, but the 19th, and we're off and running and grinding higher. So hopefully a few at least have managed to snare some positions to swing into year end. There are a few things that you might want to consider with this, being the options expiry. I think we've talked about this before, but we will talk about it the week after next when it's back on the agenda. We do get a bit of weakness around the middle of December sometimes, but the move into year end is actually good. So bear that in mind. Stock markets are pretty nice at this time of year. See if you can get yourself a little bit of that. They're doing well once again today. But let's leave it there. If you do want to reach out to me to do some one-to-ones and learn a little bit about how the volume profiles work, they were working pretty well on the highs for Wednesday to the lows for Wednesday on gold. This isn't a shoddy range either. 45s being the low, 83s being the high. You're top ticking that and bottom ticking it at all in the same day. These volume profiles are incredibly valuable if you understand. I feel like it will vastly improve your ability to trade. And for those of you who really want to take it to the next level, order flow trading, where we look at not just the volume that's traded at different prices as an aggregate, but we look at the volume that is traded in the market at every single price, both on the bid and the offer side. This can give us some real insights into which direction market can go. And this is what I teach. So if you want to find out more about this more professional style of trading that I believe really complements all entries, really just gives you those extra confirmations, probably gives you better entries, tighter stops, which in turn, even with the same target, is going to give you a better risk reward and hopefully a higher win rate. Very happy. Very happy. Lovely to speak to you. Have a great week. Should be a good one.